Most estate plans we review, drafted by other law firms, provide for outright distributions to the next generation without any guidelines or suggestions on how the wealth should be used. Clients should have choices to share their wealth based upon their values and not just because someone attains a certain age. For example, careful consideration should be given to outright lump sum distributions to children or grandchildren from 18 to 25. A majority of the people receiving distributions during this period of their life end up spending the money on parties, fast cars, and other undesirable activity. A recent national survey indicated that over 70% of wealth received without restriction in the 20s results in very little wealth being accumulated upon reaching the age of 30. Traditional methods of distributions in the estate planning industry try to attack these outright distributions by creating lump sum distributions at the ages of 25, 30, and 35, when children and grandchildren are seemingly more mature. However, if you look at this time period, for most people, it's really the age of their ambition, where they work hard to develop their career and further their professional aspirations. Young adults are really planting the seeds for a lifetime of accomplishment. Smothering them with wealth during this time period may actually fundamentally change the course of their adulthood. Careful consideration should be given to any sort of distribution during this period of time, which is not tied to a specific purpose that further your core values. We need to avoid the risk of smothering their ambition. Some may say, well, perhaps we should distribute from ages 35 to 45. This time frame is not necessarily a good time for lump sum distributions either. During this period of a person's life, they are keeping up with the Joneses, which means they accumulate assets or toys which might become liabilities in the future. For example, homes that are too big, expensive boats that depreciate in value, assets that come with insurance costs and storage costs and maintenance costs and costs associated with slippage fee, association fees. These concerns drive the values-based estate planning movement. At its core, we are trying to enhance the lives of our loved ones rather than fundamentally change who they are. By giving them lump sum distributions without any sort of guidance, there's the risk that we are not furthering values that are core to who we are. This is the biggest gift that you will likely ever give to your children or grandchildren. Shouldn't you try to match up your values with the gifts that you are giving? What we are trying to do is simulate what you would do to help the next generation if you were alive and able to distribute the money directly. Many of our clients value the institution of marriage, for instance. They value it so much they're willing to spend tens of thousands of dollars to celebrate their children's decisions to get married. Education is also a strong core value for many of our clients. Should you consider providing distributions for higher education of your children? Maybe you would want to allow distributions for your grandchildren to go to college. If you are alive and financially able, you may help your children buy or start a business. You may want to encourage purchasing a business. You can create a method for distributing the down payment for the purchasing of a business. We create a method of approving the business in the same way that you would have approved if you were alive to analyze the opportunity. Maybe you are concerned about your children's family having adequate health care. You can provide a method for your children to have access to health care. Home ownership is another value that is important to many of our clients, and they want to assist their children in procuring a house. But should we just allow them to have unfettered access if it's for a house? Ordinarily, our clients create a formula so that the children otherwise qualify for the purchase of the house with the assistance that the parents are providing. And the parents are only enhancing the opportunity by providing a down payment and requiring that they otherwise qualify for the mortgage. Maybe you want to allow your children or grandchildren to purchase a new car every few years with a distribution from their trust. Perhaps you want to encourage a stay-at-home parent or even homeschooling. If these are important values you possess, we can create a method of distributing wage replacement to the stay-at-home parent so that your children do not have to make significant financial concessions in order to provide these alternatives to your grandchildren. Maybe you want to encourage travel and want to provide for a trip to remote places in the world every few years. Perhaps sports is an important value. You can allow distributions that allow for golf memberships, hunting season tickets to your favorite team. You can do the same thing for the pursuit of musical endeavors. You can create a trust that helps support your pet or for your children to have pets without creating financial burden like horses. We see a recurring theme of working hard as a core value of our wealthy clients. You could create a salary matching program or a bonus program that encourages your children to work hard. For example, you could match their annual income with a 10% distribution match, maybe only after they earn a certain amount. Perhaps to promote family unity, you could allow for distributions to promote holiday celebrations among your family. The cost of travel or a vacation surrounding the holiday for your children and grandchildren could be distributed from their trust. Charitable contributions are often important to clients if they want to facilitate a method for the next generation to be similarly charitable. They may develop a matching program where distributions can be made if they're matched by the beneficiary to a church or another nonprofit organization. Family cabins are an important part of the lives of many Minnesotans. Maybe you allow for a distribution to help purchase that cabin. We will oftentimes take the remaining portion of the funds not used during their life and structure it as a retirement allowance for your children so that they can have a smooth monthly income upon reaching a certain age. Our job in the values-based estate planning model is to understand what core values are important to you and try to find a way to yield that for the next generation. During your lifetime, it is unlikely that you provided significant financial gifts to your children without there being some purpose being furthered or some opportunity that you wanted to enhance. So why, after a lifetime, would we consider giving the largest gift we've ever given to our children without furthering the values that are so important and near to us? I had a client one time explain to me that he did not want his child to receive a distribution without undergoing drug testing. He very succinctly stated that he did not want his child to be in a worse condition due to his wealth by being further entrenched in addictive behavior. That particular client's child had previously demonstrated addictive behavior, and it was from genuine affection and love that he created this drug testing requirement, not as a way to penalize. The way in which we create the trust ensures that creditors of your children and grandchildren can't attack your wealth, nor will they be required to defend the wealth you leave them, even against ex-spouses. The purpose of this video is to explain how you can use your wealth to enhance the lives of your children and your grandchildren rather than fundamentally change their life.